What up, what up, what up? Hey guys, gonna go over a quick video just describing some stuff that's been affecting me and how I'm working on my continuation model and what you should be looking out for if you're a continuation trader. Because this doesn't apply to really reversal traders because you, as a reversal trader, you get in earlier in the move. But as continuation traders, we're looking for an expansion past these areas and we got to be careful of these key levels that can cause more reversals. So an example, what happened to me today without going into too much detail. I was trading this area here, looking for a continuation trade to the upside, and we ended up running into these intermediate low highs. Let's see, where was it? But so pretty much we're starting to take out all this liquidity built up here. And as we're taking it out, we're having these pretty much small reversals off of it. And this is what messed me up because I bought towards the top of the move. And as normally a reversal trader that's moving towards continuations for prop firms to try to maximize it, make it better, I need to be aware of these internal highs that can cause small reversals over, and we'll go over different examples. So for example, here, we run up, we manipulate this high, and we run lower. This is where we hit a retracement phase where we're running, and then we hit a high, and then we retrace. So this is what I did last time, and I'm not trying to buy at the very top here. I'm looking for the buy at the retracement into a PD array, so like a fair value gap or a order block or whatever you use as turtle soup. So in this instance, I don't even know if we had a fair value gap here, but you can trade off this order block. But yeah, you're pretty much waiting till you get to the PD array first and not trading at the top. Because this is what happened to me. Because there's a fair value gap that opened up here, I'm like, sweet. That's not my color. Hold up. I'm like, sweet, we got a fair value gap open. We're going to run down, respect, and expand. But what I did realize is we're higher into premium discount. We're higher into the range. We need to retrace lower after this sweep and hit this order block or hit this area we're using and respect that. So my stop was under this low. We got rated that way. And this is just something I want to be aware of because obviously these are still draws on liquidity. Like every single one of these is considered a doll. So we're shooting for these targets, but we got to be aware of the reversal points coming off of it. So let me go to other days. Friday's price action was garbage as crap, even though we did manipulate lower reversal, had a good bullish continuation, as I was kind of expecting. But days like this, like we had Thursday, we open high and we just flushed to the downside. So with Thursday, we aren't really expecting too much reversals from these lows. I can try to find some identify, but see, this is the area where we might see some sort of reversals in this area here. But we're looking to get in a little bit before this because this is kind of where it chops around and it can't be very clear with it. So I'll stop yapping, but what I really mean is be aware of the lows we're trading into as we're trading continuation traders. Because as continuation traders, we're following the trend. Once we see we have a high put in place, we're just going to be trading alongside the trend, grabbing any trade we can in these areas like that. But we got to be careful. Like, hey, if we're grabbing a trade down here, guess what's there? A low. So the low is going to cause some sort of reaction. So we got to watch out for these lows because the lows, once they get swept like this, boom, we can't enter below because it's going to give us a reaction afterwards. We got to wait till we tap into a PD array, fair value gap or something. Then we start running lower and expanding from there. So something I messed up on Friday, and I could have avoided that stupid loss because I entered high in the range after sweeping out a high. But in the days, like really expansive candle days, like if we go to our profiles, what was I using? I got it. You'll see like in days like this, where we put in the high week on Wednesday, Thursday, we're obviously expecting bearish price action. It's not going to really react to any of these lows. Any of these lows here, this one, like it's just going to flush through the heck out of them. So we're not really too worried about that. Oops. But on less probable days, let's look at what happened on Monday. What was Monday? We had a sell program. Yep. Monday was pretty clean. It was not like crazy clean, but we still offered something. So even with Monday, so you see we'll have reactions off these lows. So I'm not looking to take a continuation trade down here. I need to get in this area here where the body of the candle, this is how to look at it. Oops, frick. We're pretty much trading the body. So it's different reversals because reversal traders, we're trading the wick of the candle. We're looking for that manipulation move up here. With continuations, we're trading in the body of it. So we're looking for any sort of PD rays open in the body. But when we enter in the body of the candle, we got to be aware of the internal lows in the candle or internal highs that we're going to get reactions off of. So yeah, hopefully that makes sense. But yeah, for Monday, just going to go over, see if we had anything. We obviously, once we hit here, we had a bullish retracement into this fair value gap here, which was a trade I did take. I think I took on this trade. I think so. We like tap that CE perfectly. But yeah, it's pretty much being aware of what liquidity pools we're approaching, because that can just mess up your continuation trading so bad, because if you're enter low like this, you're gonna get chopped. You have to wait. You have to wait for the retracement with continuation. You have to wait in order to take that valid continuation downside, because if we're doing it anywhere else, we're just gonna get our butts whipped and it's not gonna be pretty. So hope this helps, guys. This is a quick video, just something I messed up on Friday. And for future continuation trades I'm going to be taking, I'm always going to be referring to where we are on the premium discount of the range. So you can always pull up like a GAN box or something for premium discount. I think it's the other way around. Yeah, sorry. I'm tripping, y'all. Premium discount. So we want to, if we're looking for sales, we obviously want to get back into discount before we take any trades to the downside, because the premium is just a kind of a no-go area, because we have liquidity pools that we can look to expand upside. So simple task is use a range or use a premium discount, use something along those lines to help you identify and go off there. So stay safe out there, guys. Enjoy your weekend.